Hey everybody, welcome to the fourth episode of this podcast, and today we have a very special guest with us. That is Shijumon Antony. And sir, thank you so much for being here. Personally, before starting this podcast, so I want to tell you that I am personally a very big fan of you. I have been following your work for a very long time. It's actually a proud moment to have you here on the show.
Thank you for having me here.
Yes. So, sir, actually, when you take a look at it, so a lot of people would have put something on their social media or YouTube or Twitter, for example, right, through which we sort of know their journey or how they came into the market or what exactly they are doing, right? So, very few of us have actually heard about your story or your journey, how you made it into the market. So, before starting off or before understanding more about your trading, so I just want to know what actually made you come into the market and what actually made you come into the entire field of options.
Sure. So there is one interview with me which describe all the trading journey of mine, but that is in Malayalam, that is there in the YouTube.
Okay.
So for other people, I will explain once again in brief. So in year 2000, when I was in college, I started small trades. That was in equity, but that was not a very long stint. Few months trade, then I left it. I was a loser. Then in 2009, I think when the market was at the bottom, I got to invest in one stock, which shot up like 4 to 5 times in like one plus years. I made some money. Then with that money, I again started trading because my broker told me if you trade in options, you can make even more money.
Okay.
So I went and traded in Nifty monthly options. Those days there was only monthly options. So within 4 or 5 months, the entire money was gone. Whatever profit I made plus the capital, it is gone in 4 or 5 months. Then I didn't trade. Then again after few months, again I made some money. Then arranged some capital and again started trading. So it was from 2010 onwards on and off for 2-3 years. Then 2013 onwards, somehow I started trading regularly because initially I didn't know anything. Then I started learning bit by bit. There was no YouTube YouTube was there, but I was
not much content.
Yeah, not much content, or there was nothing. Training was not accessible to a common person. I did not even know a trader who is making money or who is actually trading. So from the money control message board, I knew some people. Then we formed a group in Google.
Okay.
Then that group is still active.
Okay.
Those days we started with about 150 people. Now we have about 30 people.
Okay.
Almost everybody is like good money. Good profitable traders.
Okay.
There are some extremely profitable veteran investors and traders there.
Okay.
Because they are like very seasoned people. So interacting with them also helped me to learn a lot.
Right.
Then gradually in 2014-15 and all, I was trading, started selling options because those days selling options was a nightmare for retailers. But when I saw that premiums are melting, I thought if we are selling option, money will be little more easier. It was indeed. I was making money because premium was very high those days. You sell call and put, almost every time you end up in profit.
Right.
That is how it was.
Right.
Then whatever money I was making, I was also doing side by side option buying those days. But whatever money I was making through selling, it was losing in buying. So I was actually nothing taking home.
Okay.
Everything I was losing back in the market. So it continued for so many years, on and off. I make money, lose, that boom bust cycle. It kept on happening for so many years. And in 2019, when the general election was there, by 2018 year end, I went through all the prior year like 2014, 2009, 2004 and all the election year, and I checked what are the implications, how the market behaved and all. That really helped.
Okay.
So that backtesting and that study really helped. And 2019 election time, I made very good money. Very good money in the sense whatever capital I had and what I made was like extremely big.
Okay.
The problem was election got over in May. Then June there was a budget. After the budget, June or July there was a budget.
Yeah.
After the budget, again volatility died up.
Right.
And when it is gone, when the volatility is gone, I didn't know how to protect the capital. I kept on trading the same way, and within maybe within a year, I lost major chunk of the profit. 70-80% of the profit is gone slowly in those 7-8 months. And the COVID came in, and COVID fall also I could not capitalize much because I didn't have too much of capital at all. Then slowly by 2020 mid, the market picked
Right.
up from the COVID bottom, and it started gaining the momentum, volatility, and everything. Then those days, by then I learned a lot of things. Like each time when I was making and losing, I was learning a lot of things: how to make more money, how to protect, how to save money. All of that I was learning bit by bit. Then from then onwards, I was able to consistently make. From there, I think I didn't have to look back.
Right.
Even last year, when the VIX was down and volatility was down, I had a hard time. Like 6 to 7 months, I had a hard time. But because of the previous experience, I knew how to protect the capital, how to protect the money.
Right.
So I didn't lose much. Means I lost a little bit here and there, but there was no disaster. There was no painful loss or anything.
Understand.
So I was able to protect. And
So,
now when the volatility picked up, I am able to again generate the similar return. I don't know how long, because this kind of situation, volatility may dry up very soon. After that, I will reduce the capital and I will trade with very small amount and small quantity.
Got it. So in this journey, sir, so at what point did you decide to come out of your job? Because so as maybe how you have described, right? So 2020 was a breakthrough year for you, like which really changed a lot of things. So prior to that, had you moved out of your job, or post once the things stabilized?
No, I was working in a company called Sutherland from 2006 onwards.
Okay.
And all through the trading career, I was working there, and I was in a good position and good salary, so that funded my trading actually.
Okay.
Trading journey. I quit the job only when I was able to generate enough money through trading while working. Like I paid off all the debts. I was able to buy the home, car, and everything without any loan, and I was able to save enough money.
Okay.
Plus the reserve capital. After saving all of that, only I resigned the job.
Okay.
Because when you have a job, there is something to fall back on.
Right.
Otherwise, when you don't have enough backup, it is very difficult to rely on trading, because when you have so much of stress, you won't perform in the trading.
So this is a very important point. I will touch upon that maybe later half of the video where I'll be discussing. But let's come into the aspect of trading. So the entire idea of this podcast is, okay, today if a beginner is watching, or for example myself, if I want to maybe slowly start replicating the style of Shijimon, what are the points I want to know? That is what we want to take away from this podcast. Alright, so just to give our viewers a fair idea of, okay, what kind of trader you are. So in based on my understanding, based on my interactions with you, so I know a couple of things that, okay, you are a purely directional intraday trader who likes to both buy and sell. So that is a very unique thing which I have seen. So like if you, for example, take a look at myself, so I am only into selling. My psychology doesn't support buying, right? So sir is one such person who actually can do buying and selling simultaneously at the same level of confidence, right? So you generally like to carry only intraday. You trade with a small amount of capital, and whatever the profit or loss, let's say there is a profit, you withdraw the profit. If there's a loss, you pool in the account. You don't carry any overnight positions. Correct. And you play directional.
Correct.
So anything have I missed out in?
Yeah, there is one thing I do overnight very rarely.
Okay.
Not on a regular basis, but there are like extremely good situations where there are some events and we have some clarity based on the market behavior. So those times I tend to carry some position.
So before moving on, so I would just like to talk about the sponsor who has helped us bring this video to you. And the sponsor for this video is Firstock. Firstock, as you know, is a broker which we have been using from almost 3 years. Now, within the next quarter, they will be coming out with a new platform which is extremely advanced. So to get early access to the new trading platform, not just that, to get also early access to all the offers they will be bringing in the future, make sure you open an account using the link in the description below and get 2000 rupees worth brokerage credits absolutely free. Right? So you are now pretty seasoned, and if I just show you the chart, you will be very well able to say, okay, where we are, or how pretty quickly able to spot the trend, right? So in case, let's say a beginner today is watching this video, right, and he has no idea on what are the simple aspects which he can keep in mind to maybe analyze the trend of the market. So if you were to give him an advice, or you can give it to me itself, because I would love to learn from you. So what are the things that I have to keep in mind to judge the trend in the market?
So judging the trend in the market is the toughest thing for 99% of the people.
Right.
But there is a very simple solution. When I say that, you will ask me, what are you saying?
Okay.
But actually, when you start doing that, you will realize it's a magic.
Okay.
So this is what I tell everybody. If somebody is asking me how to judge the trend, put the daily chart on the screen, on the computer screen. Look at it with bare eyes,
No
without any
indicators,
indicator,
nothing.
nothing. If the chart is starting from left bottom of the monitor
screen,
to
okay. Right top
of the monitor, it is uptrend.
Okay.
If it is opposite, top to right bottom, it is a downtrend.
Okay.
If it is somewhere in the middle oscillating, it is consolidation or it is sideways market.
Right.
It is as simple as that. When I say this, you will say this is like stupid answer. But when you start actually doing it, you will realize how powerful it is. But the problem is that is not the actual problem that traders are facing. Like if you look at the trend of the market right now, it is extremely bullish. If you put a daily chart of Nifty, Bank Nifty, Mid Cap Nifty, Fin Nifty or anything, it is extremely bullish trend. But doesn't mean that you will always trade bullish, right? For example, today market is falling. We have to trade downside.
Right.
So those are the tricky areas. There are certain days where we need to judge the intraday trend differently than the positional trade.
Okay.
So that depends on so much of experience you need to, means how I gained experience is I collect the chart and organize in the Excel sheet and I review time and again from 2018 till now. I have the collection. I go back and review and I see what are the patterns repeating, and if 3 or 4 consecutive days, if something happens, what is the probability for next day. It is just a breakdown of candlestick.
Got it.
Like you look at the candlestick pattern, you see there is a bearish engulfing or bullish engulfing or harami pattern or inside pattern or something, and you try to judge, okay, what is likely to happen next, right?
Right.
I just break down that chart to intraday chart on an Excel, then I review in detail manually, which will give me more insight.
So, sir, just to maybe understand it much better. So, like, I think last time I had also seen your Excel where you had collected you arrange it based on Monday, Tuesday, Wednesday, right? So, one is from how long have you collected, and second one, so today, for example, like just to give them a scenario, so around 12 o'clock itself, like much before anything happened, so sir told that, okay, today 2:45 we are going to see a trending direction. So it was totally out of random, like there was nothing behind it. So we were just making fun saying that you're not just trading the present, you're also trading the future, right? So if you actually take a look at it, today from 2:45 exactly the market made a top, and till 3:30 there was a down move of almost around 400 points in Sensex expiry, right? So these are the patterns maybe. Okay, so do you think out of the chart you have collected, so these are the patterns which might have repeated and you have told today, but do you think this historical data collection can give any person a very fair idea of where the markets can?
See, it is not that we can predict this kind of pattern every day. To my luck, today this rare pattern repeated. I have seen this exactly same pattern multiple times in the past. Not that every week or every month, but in the last these many years, multiple times, maybe 10-15 times I have seen in the last 3-4 years the same pattern. So I was seeing that that is emerging from the morning. So that's why I told from 2:45 to 3:30, market is likely to fall.
So mostly, sir, let's say you have seen charts for so long, right? So is it that, okay, what happens in the first 1 to 2 hours, right, has a huge impact on what is going to happen in the next few hours? Like
exactly, exactly. So if you look at my trading style, most of the days, the first couple of hours, I rarely trade. Whenever I trade also, it will be with very small quantity. Even when the market is moving crazily, my position will be very less. But whenever the market is moving the second half, most of the time I will have a very big position. And the biggest challenge I was facing when the VIX was low was market was moving big in the first 1 hour. Then after 10:30 or 11:30, first 2 hours, market was like consolidating throughout the day.
Okay.
That is where I was facing the challenge for the last 1 year because the market was not moving. When VIX picked up, it changed.
Right.
So that's what I'm saying. What happens in the first 2 hours, it exactly dictate what should happen in the last 1 or 2 hours.
Okay.
So that is what is helping me very much to convincingly take a trade.
Right. So maybe just to give a brief, let's say as a starting point, right? So you would say that, okay, if somebody has to like start predicting the trend, more than using any indicator, more than using anything, just go back to the charts, study the charts. Correct. The patterns usually repeat itself. So can that be a broader takeaway?
That is one thing, but you cannot ignore the indicators completely.
Okay.
What I would say is take all the major indicators, plot it, and go back and read and understand what is the logic behind each indicator. Like if there is a Bollinger Band or if there is a moving average, how it is being calculated and what is the relevance. We need to understand all of that because that will give you better understanding of the market and chart and market behavior.
Right.
Then take it off. You don't have to use any indicator or VWAP or ATR. All these indicators, studying all these indicators will help you to understand the market, understand the chart, understanding the market behavior. Because these are prepared by very knowledgeable people or the people who was very seasoned in the market, successful in the market. So there is a reason behind the indicator. But indicator itself, it is not going to help because the market keeps on changing and it is very difficult. And you may get you need to have so much of discipline to make money with using the indicator.
Right.
But if you learn the indicator, you will understand the logic behind the indicator, which you can actually incorporate in your normal day-to-day chart trading.
So what would Shijimon use on his charts? Like if let's say you take a chart on a typical day, right? So what would be the chart setup? What would be on his charts? Indicators or trend lines or?
It's normal. During the trading time, I mostly use 3-minute chart, and I will have the trend line only parallel, not the slanting lines or not the channel lines, only the parallel trending lines for all the swing points. And I'll have the normal volume plotted on the chart.
Okay.
That's it.
So, sir, okay, let's say now, okay, Shijumon comes and sits in front of the screen at 9:15, right? So what would be running in his mind? Like, what is the first thing he would look at, or how would he start building up the position?
So every day, somewhere about between 8 to 9, I review all the charts, global markets, all the commodities, currencies, bond yield, cryptos, and all the major news, just to see if there is any anomaly. It is not that, okay, you review bond yield or currency market 100 days, nothing may help you.
Right.
But maybe 101st day, or maybe one day in the entire 1000 day you review, maybe one day it will help you big time.
Right.
Or maybe it will save you multiple time. Because sometimes when the market is falling or market is about to fall, or there are some news, this currency and bond market react first. Or even commodity market. Like if there is a war or any issues, you can see that crude is going up, gold is going up and all, right? So this will give you a heads up. It is not that, okay, it is going to give you any magic wand or anything, but it will help you to save, or it will save you from a lot of traps, and it will help you to keep yourself updated.
So based on this, right? So is it right to say that, okay, Shijumon will have his first hour trade ready even before 9:15?
Yes.
Okay.
Let's say, I'll give you an example. Like we had a very good uptrend. Maybe 3-4 days we had very good uptrend. Then we saw 3-4 days consolidation. Market is not falling. It is holding the uptrend and it is giving good consolidation. And any time market can give a breakout and rally. So we are in that kind of situation. So when I'm reviewing all these factors which I mentioned, there is no anomaly, everything is normal, absolutely nothing. So that means I need to be ready to capture any further breakout any time. So that's my intention. Then throughout the day I'll be looking for that. Or imagine the market keeps on going up and it is heavily overbought or anything, there is a chance for a correction. And if that is the kind of situation, I will see everything and I'll see if there is a chance for a correction coming. Then I'll be looking for the correction. So I'll set up my mind, but the actual trade will be depending on the market.
So, sir, okay, just to get a broader idea, right? So, as I already mentioned, that I have seen very few, or like literally handful of people who can do buying and selling at the equal level, right? So, if you find a trading opportunity, so at what point would you decide, okay, this is a selling trade or this is a buying trade, or what are you more inclined towards, and how would you decide to do the other thing? Let's say you're more inclined towards buying options because of a higher risk to reward. So what would push you towards maybe selling option instead of buying?
So in a structured way, if I say, I trade the market.
Okay.
I don't trade the price.
Okay.
So when I trade the market, depending on the market action, I'll have to decide whether I need to means whether I'm expecting a bigger move or smaller move. So in broadly speaking, maybe we can say there are 5 trends: extremely bullish, mildly bullish, sideways, mildly bearish, and extremely bearish. So if I'm getting the indication of an extremely bullish trend, there is no way I'll be doing the buying only. And if there is only mildly bullish, I will go and sell the put option. But if I'm getting the indication of the sideways market, I'll go non-direction. I also do the non-direction like other people. I also do the non-direction, but that is very rare trades.
Okay.
Whenever I don't have the view for uptrend or downtrend, I do the non-direction.
Okay.
And buying and selling, for example, I'll give you an example. During the election week, I was clearly mentioning before the result day itself, a few days back itself, I mentioned, I'm not going to sell option for the next few days. And I kept on repeating that on July 4th, July 5th, July 6th, July 7th, and that entire week I kept on repeating that. Because those days, if somebody sell option, it means even if it is directional,
right.
Because the market was moving wildly. Market was moving down, you sell call option, but still it will bounce back and hit your stop loss, and it will go down. Because sell options, you can't sell and sit idle because you don't know how much is the risk. Right. So those kind of situation I completely avoid selling. And the very next day, the very next week, if you look at my messages, I was clearly mentioning
market is more
this week.
It's
whatever happens, I'm going to do the option selling only, because the option premium spiked a lot, IV spiked a lot, VIX was very high, but we already had the move. Market came back to the equilibrium. It fell down drastically, came back to the resistance point, and it was like hovering around that. And it was very likely that the market is going to have a consolidation there. And during that time, the premium was extremely, extremely high.
Right.
So you buy, you are
likely
to get anything.
Got it.
So those kind of situation, I'm selling only. And other days, like for example, today, the market I was not getting the strong trend, maybe vibe, but it was likely to trend. So morning, what I did was like I bought put option. Also, I sold some call option. It is totally depends on the position sizing, because I size my position in such a way that if I take a trade, buy trade, and even if the price goes to 0, it has to be within my risk tolerance.
Okay.
That is the first thing. And second thing, I take the buy trade only when I have the convincing view. Let's say the price is going up, it is breaking the resistance and it is going up, but I don't have a convincing view that it will continue to go up.
Okay.
If I go and buy the option, immediately if it gives a red candle, I'll be scared. I may exit in loss. Next candle may be green, it will again go up. Then I again buy it. Again, another correction or pullback, I will again exit in loss. Despite of market going up, I'll make loss in a call option buy. Right. But if I have a strong sense, strong conviction that the market is going to be directional on the upside, and the market is at a support zone, then I can buy it. I can buy it thinking that, okay, if the trade goes wrong, I know how much is going to be the loss. I'll come in terms with that loss first.
Okay.
Then I will take the position and I look at my invalidation point. Okay, these are my invalidation points. Maybe price level, maybe the premium, or maybe the conditions, situations and all. I consider, okay, where to exit. And if I exit there, most likely 70% of the premium will be gone if it is on expiry or day before 0 DT or 1 DT. Most likely 60-70% of the premium is gone. So I will come in terms with that. Okay, if this is gone, is it within my risk tolerance? If yes, only then I'll take it. Otherwise, I'll reduce the quantity and take it.
So, for example, is it the case, let's say you take an entry in the morning. So, today you had a strong view after 245, assuming that you had an entry in the morning itself. And market hasn't given you any exit. Right. But the market is neither going in your direction. And you wait till 1 o'clock, you see, okay, so the premium is still half left, right? So it has not completely decayed. So at this point, would you maybe rather wait for it to go to zero, expecting, okay, the move might come later on? Or is it the case that, okay, the move is not coming, half of the decay has happened? So
I wait until either of the situation happens. Either my view invalidates or my
view validates.
Today, for example, 245, I told you that market will is very likely to come down. So by 240, I took the Sensex put option, and you were seeing that I took the 3 strikes. Maybe one was like 60 plus, and one was like 40, and one was 20 or 19 or something like that. I took, and after some time, market was not moving. If you look at 245 onwards, market started falling, but it was mild till 255.
Right.
So 240 to 255, around 15 minutes, market was like mildly falling. It is coming like this, little coming up, little coming down. So within that 15 minutes, the 60 premium went to like 40. That 40 premium went to like 16 or something. That 19 premium went to like 6 or 7 or something. And it was like almost gone. But my view was not invalidated. So I was considering that between like 240 and 250, whatever high was made, if it is breaking and sustaining above that, I will exit. Even if it is 1 rupee, I will exit there only. Otherwise, I'm not going to exit. I'm going to leave it for zero. But later, after 245, when the market started falling, you saw that it went to like 290, 300, one strike, another one 220, 230, and the least one like 100 plus, right?
So now, let's say I want to restart buying or give buying a new try, right? So with a very small percentage of capital, right? So how can I get started? So it might be helping a lot more viewers who are starting with smaller capital, but generally it's my personal and curious doubt. How can I get started?
So when I buy, I don't have a specific rule that okay, I'll buy at the money, in the money or something. Depending on situation, sometimes I buy in the money, sometimes at the money, sometimes way far OTM. So depending on situation, I do all of that. But if somebody is starting to buy, I suggest you start with at the money.
Okay.
Because at the money is the most balanced one for option buy.
Okay.
What I have seen is that. That is one thing. Second, always remember that if the trade goes wrong, it is going to lose the value. If you are buying something for 200 rupees, by the time you realize that the trade is wrong, sometimes it will be like few minutes, sometimes it will be like a few hours, sometimes it will take like 3-4 hours to invalidate the trade. By then that 200 rupees may become 60-70 rupees.
Understand.
You have to be ready that okay, it will go to that kind of price. You need to be
ready to take the hit.
That is one part of it. Second part, when the market is agreeing with you, when the market is moving in your direction, you bought something for 200 rupees, it is 250, it is becoming 250 rupees. Don't get excited and take the profit, because that's not going to help you. Because when you are getting a hit, you are getting the hit of like 100, 150 points or 100 plus points, you are getting the hit for the same option. And when you are making profit, especially in option buy, it has to be way more than that.
Right. So I think that is the major issue, sir. This is one question which I wanted to bring up. Right. So the major issue is with the maybe psychology, you can say. Right. So most of the buyers, whom I know, or people who, let's say, retail traders who trade. So the major issue is they are not able to ride. I have seen you buy options at 100, I have seen you buy options below 1 rupee, right? And go 20x. So that I think on the budget day you bought at 100, 120 and rode it till 1800. 1400. And also one other day you bought, I don't Nifty options under 1 and you gave it at some 20 odd, right? So let's say somebody is buying huge quantity at 1. He will be very happy to sell at say 2, 3, 4, even 10. He will be extremely happy. So what are the things you would say maybe we should start developing, or what gives you that conviction to write 20x, 30x? So that
I do the buy option only when I have extreme conviction that I can hold the position, especially the OTM. If you remember that 1 rupee to 24 rupees, what happened was there was one swing high that was acting as a resistance for so long. It was not getting broken at all for a very long time. Every time it is hitting there and coming back. And one expiry day, after around 2 p.m. or something, it slowly came there. And it just broke. The VIX was very low, and one strike away it was trading at 1 rupee, and at the money was trading at 4 rupees around 230 and all. Extremely low premium, and it's broke the that resistance which was held for very long time. Then slowly it came down to that resistance point once again for retesting. Then it started giving the green candles again. Then it struck me. It just need to give just one spike, it will go and make that 1 rupee option ITM.
Okay.
That's what I thought. Immediately I went and bought that one.
Sir,
what I'm saying is, such situations are very rare, extremely rare. But you get that kind of situation.
Got it.
That is the time to buy options. Otherwise, whenever you are getting the strong trend, you can buy options.
Understood.
Don't go and buy options every day.
Understood. Sir, this actually brings me on to another point which was made in the previous podcast by Vijay Tucker. So I want to get your opinion on that. Right? So I had asked him a similar question. So the thing is, he does extremely good momentum trading. So he has a very high strike rate. Right? So the thing is, one thing about his trading is he always sets a target. Right. So his idea is simple. Let's say there is a stock with a fresh all-time high breakout. So whatever was the previous drawdown of the stock, right? So he generally projects that to be the further target. That's the basic idea, right? So I asked him, sir, okay, maybe if you start doing this, you might miss out on say 5-bagger, 10-bagger, 20-bagger, right? So he gave me a very logical point, saying that okay. There are cases where I get 5-bagger. So there are cases where I wait for that 5-bagger and the stock comes down. So end of the day, the whole thing will average out and I will get my average there.
Correct.
Right. So in that sense, like purely going by that sense, do you think, let's say an option buyer just going by his probability of that, let's say I don't follow any trend, anything, right? So just a pure probability of 33%, right? Is there a say ideal number to fix my target, say 2x, 3x?
No, I never set the target.
Okay.
Because like he said, for certain situations, yes, you get the average. If you are a good trader, you get the average. But always remember that your winning trade should be much bigger than your losing trades. That is one thing. As long as that is there, you can get a good strike rate. And even I am also not trying to get 2x, 3x or 20x in every trade. It is a very rare situation. Once in a while we get that. Otherwise I will also exit. Maybe I buy for something for today. If you look at my Bank Nifty trades, I didn't get that big of the return. Like whatever I bought for like 230, I exited for maybe 300. Then again I got for 240. That exited for 350. Something like that. It is not even 50%. So that's how the trading is. But rare situation, you get everything right.
Got it.
With momentum. That time ride it.
I think it's like a practice where you have to decide, okay, whether you should be cutting it at say 0.2x, 0.3x, or even ride it till 10x. Or
I don't look at whether the trade is in profit or loss or in extremely good profit or even 2x, 3x or 10x. What I'm looking at is the market giving an exit.
Got it.
So whenever I exit, the reason is the market is giving an exit. It is not because I got 1x profit, 2x profit, or I am in 50% loss or 30% loss or on the trade.
Got it.
That is not the reason. The reason is market is giving an exit.
Understood. Sir, actually, like I am a little moving off the script to understand your perspective, right? So one is like as a seller, I will tell you generally what happens, right? Say we have sold option at 30, 40 rupees, right? The option comes to say 3 rupees, 4 rupees. At this point, okay, we decide, okay, the option is at 3, 4. Rather than holding this 4 rupee option, if I go 2 strikes above, it might be trading at 2 rupees, right? So the 2 rupees, my risk will considerably come down by moving 2 strikes away, right? Just to give you a very vague example, let's say it's 10 rupees and 2 strikes away is 5 rupees. I am very happy to take that 5 rupees because I have already captured 30 points here, right? So that way, let's say an option buy has gone up quite a lot. you have bought, let's say 200, it has now been gone to 600, 700. So do you somewhere feel, okay, maybe you don't do it, but okay, if you shift up the options, say from that 600, maybe you come down to 400 or 300 option, right? So, and have the same quantity.
On the buying you're asking?
Buying. The downside will be coming down quite.
Gamma scalping.
It's more than gamma scalping. Let's say the option has gone to 600 from 200. Now, if you book at 600 and come to a 300 option, the upside you're anyways almost going to make the same. But on the downside, you are going to get completely risked.
Purposefully, I don't do that. Okay. What I do is, if I get an exit at 600, means if I get a swing point or a partial exit at 600, I may do the partial exit. And when the market is giving a pullback and another exit re-entry opportunity, I may not capture the same strike. I'll go further up.
Understood.
Like another strike which is maybe trading at 300 rupees. That Understood. I do. That I do. Not purposefully for this reason, but when I partial book and when I do the re-entry, I will pick up the ideal strike or at the money or whatever during that time. And one more thing I wanted to cover here, you said selling options and squeezing the last drop out of it, right? I never do that because initially when I was doing the option selling, it hit me multiple times. Like I sold maybe for 100 rupees and it came to like 5 rupees. I wanted to get the every last drop of the blood. Then I kept on holding it and it went back to 100 or 200 and I lost. So now what I'm doing is even on expiry day, in case if I'm doing the selling option, if I get like 80 to 90%, between 80 to 90% DK, then I exit it. I exit, take profit, I look for a better trade. Not that the next strike or anything, I just exit, then I look for a better trade. Because then there is no risk reward to keep that trade. And that saved me multiple times from disaster.
Right, sir. So I will be covering a couple of more questions before we change the whole topic, right? So one, definitely what I want to ask you is regarding the drawdown. Right. So there will be phases when you said the market, when it completely consolidates, there will be many times where you don't get the right entry. Right. So with buying options, you will be losing most of your capital out. So one thing which I already mentioned about sir is he doesn't keep the capital in his account at all. So he always withdraws his capital, and whenever required, he will put it back in, or whenever there's a loss in the account, he puts it back in, just to ensure that he doesn't lose beyond a particular amount in a single day. That is, I think, the most important thing to do as a buyer. But here, let's say you have an extended period of drawdown. Right? Maybe it can go for 3 months, 4 months. So what would be your psychology? Like, has it, or let's say, has any major change come through these periods of drawdown where, let's say, after going through a 6 months of drawdown, you change the approach completely and you come back?
Okay. See, I told you about 2019 election time, right? In that few months, like 6 to 7 months, from very small amount of capital, I made huge money. Because that time also I was keeping only small portion in the trading account, but whatever profit comes in, I was taking out. So during that winning time, it was fine. It was all fine, and I kept accumulating, and I had a good amount of savings and all. But when the momentum died out, when the market started consolidating, I started losing. So what happened was I kept the same trading capital. Whenever I was losing, I kept on backfilling, and every day I was doing that. And winning, losing, but losing was more and winning was less. Maybe within like 6-7 months, 75% of the, I think approximately 70% of the profit was gone. Because I didn't cut down. Whatever was the trading capital in the trading account, I kept that constant despite of the drawdown or despite of the unfavorable market. But last year when the drawdown happened, what I did was I had this situation in my mind. So couple of days I got the wrong trade. My setup was not working, and the market was not giving the momentum. Like I told you, right? Market, I exit only when the market gives the exit. But those days I was not getting the exit. Like something I buy for 100 rupees, it goes to 150, 160 rupees also. Then without giving any explosive move or without giving any hint of the exit, it is slowly coming down and it's going to 100 or 80 or whatever. So I kept on losing the profit and kept on losing in trades multiple times, maybe 3-4 times within a span of 2 weeks. Then I realized the market changed. Then I cut down the capital. I withdrew the money and I reduced the capital to a very small amount. Then for many months I kept on trading with lower capital. Only when the VIX picked up above 15, I again added to the usual capital.
Got it.
So again now the VIX is likely to fall below like 12, 13 after the budget. July 22nd or something we have the budget, right? So that time also what I will do is I will not wait for trade to hit me, wrong trade to hit me. And whenever the VIX is below 13, immediately I will reduce the capital and I will trade. I will keep on trading. I'll trade with very small capital. And when volatility picks up, or whenever there's an event or anything specific or news or events or something, I'll add capital and I'll trade with the usual quantity. So that is one thing changed in my trading over the last many years.
So I have a couple of more questions before we wrap up this section on trading. So this is the largest section usually in the podcast, right? So my next question to you would be, sir, slightly on the lines of investing, right? So given that you're so good in capturing trend, right? So you have very good hit records, right? So why don't you try the same thing with maybe something like even gilt funds, which do not have any risk, right? Or something like corporate bond fund, which can give you 9%.
See, I don't invest in stock market. I invest otherwise, maybe bonds and fixed deposit and all I invest. In stock market, I'm not investing, not because I don't believe in investment. I'm the biggest advocate of investment than trading. Just that I don't do it because I went through all the hard ways and I learned trading and I am able to make money. So I am trading. Otherwise, if somebody is asking me that they want to come into the stock market, I definitely tell them, I told to so many people also, don't do trading, don't do F&O trading, do investment. Side by side, learn F&O trading and use that to enhance your profit in the investment. That is how it should be and that's how people should do.
Right.
Only because I learned how to make money from the derivative market alone, I am doing it. So the reason why I am not investing in stock market is because I know me very well. Because that's what you need to do to become a good trader. You need to understand your psychology, your this thing. So with my psychology, with my behavior, what always happens is, when I put the money in the stock market, whenever the market fluctuates, I keep on tracking the investment. I lose focus in the trading. I don't want to do that. I know investment can generate a lot of wealth, a lot of compounding. I can identify good stocks. I have good gist of getting some good stock for investment. But I can't do that because it is not suiting my current psychology wherein I am doing the trading along with investing. So I don't want to do that. But whenever I want to reduce the trading and move back to do the investing or something, then probably I will do. But if somebody is asking me what do they do, what should they do, I will always advise them, do the investing. Stock market is for investing, not for trading. Trading we are doing because we want to trade. That is not the purpose of stock market. It is investing.
Right, sir. So I will just try to sum up the whole thing, what we have learned from you. There is so much to learn. So even off the camera discussions are always quite interesting with you, right? So just to sum up what we have learned from you with regards to trading, right? So one is, as we already discussed your style. So what we have learned is maybe history repeats itself. So it is always good to keep an eye on chart. It's always good to, maybe if you're starting off with a option buying setup or you want to start off as an option buyer, it's always good to first judge the trend of the market. Going by the past, if any repetitive patterns can be found, and try to make use of it. Always measure your risk to reward. Any place you feel the move can be big, only then go with option buying, otherwise just avoid it. So just to maintain your psychology, make sure that your capital is always small in the account so you don't overtrade, neither you end up losing a lot of capital. Second, in case if you are unable to judge the trend, you can go with simple option selling, and judging the trend is again fairly simple. So one simple thing suggested by you is look at the chart from left to right where the market is moving and just go with that direction. So broadly, so a couple of things. Mostly the most important thing is the inherent ability to judge the trend and go with this thing, and also practice it more so you can ride the wave. So I think that...
So more than inherent trend, the developed, because so many years, it took so many years for me also. Maybe even after trading for 4 or 5 years, I didn't know what is how to understand a trend. And I think somebody in some, I think it is Market Wizard book, in one of the interviews, one of the prominent trader one of the world famous trader, I don't remember who it was. That person used the exact same word.
Okay.
Look at your chart. If it is going from left bottom to right top, it is not my word exactly.
Okay.
That is how I realized it. When I started applying that simple thing, trend started becoming very clear to me.
Okay.
Instead of using the indicators to understand the trend.
So a very subjective question, sir. So as an option buyer, let's say I am a seller. If somebody comes and asks me, okay, how much return are you expecting? I tell on top of my investment, maybe to 18-24% is what I expect. But as an option buyer, what would be the ideal return expectation in your mind? So what, like,
say I don't expect any return, to be frank. Because there are times when we make losses.
That is definitely there, sir. But what would make you happy beyond this, let's say?
What makes me happy is where the profitable days should be bigger than my loss making day. Like if on a losing day, maybe 2-3 days I lost. All these days I was losing maybe 1,000 rupees, 2,000 rupees or 5,000 rupees. And next day when I'm making profit, if it is a good day, depending on my judgment or depending on my understanding, if it is a good day, at least I should make 5,000 to 10,000. Because when I'm losing 1,000, 2,000 or 5,000, I should make like 5,000 to 10,000 when I'm winning. That is making me happy.
Got it.
Second thing, when I follow my, when I follow my rules and when I follow my this thing, it makes me happy. And third thing, if I'm losing, but learning something very valuable, it is making me happy.
Okay.
I'm not at all happy when I'm losing because of my mistake. Or maybe something very clear is in front of our eyes, but during the market time, I couldn't judge it properly and I missed it. Yesterday was, this is June, right? June monthly expiry, Nifty expiry. And for the last 1 week, the people who call me, all my friends, to everybody I was saying, Thursday, second half, if the market starts moving up, don't short it. It will go crazy. I told to many people, and indirectly I posted many times in my Telegram also about this. But what happened was, and my plan for the last 1 week, my plan was that Thursday, second half or last 2 hours, if the market starts moving up, go crazy on calls, buy and leave it till expiry. That's what my plan was. But morning, my view changed to like sell on rise, and the morning market went up crazily. I shorted from there. I got the fall. When the market again came up, I shorted from there once again, but it went up again. I booked loss. Then again one more short was there. I got that also. Then market started rising in the last 2 hours. Exactly I expected the previous days. But my view did not change from sell on rise to buy in the last hour.
Understand.
And after the market hours, when I was looking at the chart, looked at the factors, I couldn't believe that I didn't buy call option because that's what I had been advocating for the last 1 week. That's what I planned before the market opening. But after market opening, my view changed, and the market showed all the signal somewhere about 2 o'clock, somewhere about 2:30 that it is going up. But I couldn't see that time. So those kind of situations make me very sad because it is not that I missed the trend. Market moves up and down thousands of points. I miss many of them. I go wrong in many of them. I get trapped in many of them. More than all of that, this one made me sad because this was something that I should have traded. Even morning market gave a big rally that was even bigger than that rally, evening rally. I missed it, but I was okay. And noon there was a rally. I got trapped in that and I made a loss. That is also okay because that was my part of trading. But this particular one made me so sad because this was a part of my trading setup. I was supposed to take a long position, but I didn't.
Understood.
I didn't lose anything because I didn't short, but
understood.
I lost the opportunity which was very clear in front of my eyes. So these are the things make me sad.
Got it, sir. Now, before we move on to a completely different set of questions, right? So I have a quick rapid fire just to break the ice and like change the mood. Right, so I'll just pull out my phone so I don't miss the questions. My first question to you would be, sir, okay, if a college student today would come to you and ask, okay, sir, I want to trade, would you tell him, okay, you can start trading, or would you tell him, don't trade now? So,
I will tell him, don't trade, because a college student, he can do the trading. I will ask him to maybe set up a simulated account, start trading and try to see how it is going. only if it is going extremely fine and if he is able to grab the opportunities and withhold all the emotions and everything, then only come into the trading. Because I came into the trading in the wrong way. I started trading without learning everything and lost money, lost time, lost energy, lost sleep and all. Then it took so many years for me to learn. By then I got completely involved in trading, so I am continuing it. But somebody coming new, I will advise this is not the means trading derivative is not a right profession is what I say. If they want to be a trader or they want to build a career in the stock market, there is a beautiful career in the stock market which is investment manager, or they can study something related to that topic and they can join any bank or they can run a hedge fund. Means not hedge fund, mutual fund or investment company or something, wherein they play with actual cash market stocks. Not with the derivatives, or they use the derivative to support their cash market activity.
Got it.
So that is where you can build a career in stock market.
Got it.
Not into a derivative trader like what we do.
Understood. So my next question to you.
One more thing. What I'm saying is completely contradictory to what I'm doing. See, I believe in walk the talk, but on this particular thing, I will not walk the talk because I do it because of so many years of hard work. So I don't want to miss out that. But somebody coming new, there should not be, because 99% of the derivative traders are not making money. And only 1% is making money. So if you can't reach there, it will be a disaster. Your life will be a disaster. But there are better options within stock market wherein you can consistently make money in investment.
Right.
And you can make it big.
Understood.
Derivative, there is a limit. You can't make it bigger than a certain extent. And even if you have like 1 lakh crore or even bigger money, you can invest and you can consistently make money. So there is no limit there.
So actually, sir, like what you mentioned also, like, I think I have already mentioned this in the previous podcast. So like initially in our college days, so we had gone to investor, right? So he was into market for quite some time. He has a large corpus, and he had also started during his career during the time, very early days, right? So the thing is, when we had gone to seek advice from him, so he told us on the face, don't come into the market at all. So that time we had come back thinking, he must be such a hypocrite. He himself has gotten into the market and today he's advising not to. But now I totally get it what he was saying, right? So if somebody comes to me today, I will still tell him don't come into the market. But my next question to you would be, sir, what do you think would be the ideal capital for anybody to start trading? Just a random number.
See, it depends on your needs, but I would suggest, if you don't typically when you start trading or when you are in the early phase of the trading, you can't expect an income from the stock market to support your life. So leaving aside, then your primary objective is to learn the trading and experience buying and selling and all, right? So in that sense, I'll say maybe 3 to 5 lakh if you have, you can start trading and you can start experiencing and you can do it. Like
okay, one very important question I have here, sir. So when you say 3 to 5 lakh, so 3 to 5 lakh is something, okay, a person can bring into his trading account, or are you saying 3 to 5 lakh?
No, if they have, maybe if somebody has 5 lakh wherein he can use for trading, out of 5 lakh, put 50,000 and trade.
Okay, so you basically say 10% of the net worth.
Yeah, maximum.
Maximum.
Maximum to put 10% of, means disposable capital or whatever he can utilize in the market. If it is 5 lakh, put 50,000 and trade only with the 50,000.
Got it.
Then keep on experimenting.
So what if he loses that 50,000? So
backfill with another 50,000 and do it until that entire 5 lakh is getting off. Because that 5 lakh is the trading capital which you are ready to spend for learning the market or whatever. At least bare minimum, I will say 3 lakh. Even if you don't even have that much of money, I think you do something and some job or something. Get that money, then try it.
Got it.
And with this 3 lakh or 5 lakh, don't expect an income that supports your life.
Yeah, makes sense. Got it. So my next question to you would be, sir, what is your favorite index to trade?
Bank Nifty.
Bank. Yeah. So what is one index you don't mind avoiding?
BankX, Sensex. Yeah.
My last question for the rapid fire round would be, so what do you think are the 3 main or the most important characteristics, according to you, a trader must have to stay in the market long-term successful?
See, very important thing. You should not be worried too much about the money, because if you are prone to think about money a lot, trading is not for you. If you are trading and every time you are thinking, okay, you got 10,000 rupees profit, okay, with this 10,000 I can do this thing. Or when you lose 10,000, I lost that money which I could have used for this reason. So if you are too much of money concerned, trading is not for you. Money you have to consider as a score. Like when you play a game, you have the score, right? That's how I consider. Money is a score of my trading ability.
Understood.
That is one important thing. And the second thing is patience. Patience, two types of patience. One, to wait for the right trade, because market is giving hell lot of movement. Doesn't mean that you get everything. It moves 1,000 points up, 1,000 points down. You are sitting on the sideline. You have to see. You need to have the patience to sit on the sideline without any regret, even when the market is moving crazily, because your system did not trigger a trade.
Understood.
That is one type of patience. The second type of patience, once you take a trade, wait for the trade to mature.
Got it.
You bought something and you are seeing some profit on the screen and you are tend to book the profit because you are afraid it will turn into be a loser, because profitable trade turning into a losing trade, that's a part of the game.
Yeah, and hurtful also.
It is hurting, but it is a part of the game. Yeah. But you have a very big winner. If the trade is completely becoming a loser, that is not a good habit. You have to either find a new invalidation point where you can protect your profit.
Got it.
So that is one thing. But these two patience are very important. After taking a trade and before taking a trade.
Got it.
So one is patience. Second, you should not be money minded.
Yeah.
So these two things are very, very, very important for a trader. Then you ask for three things, right? The third thing, the basic understanding of numbers and basic analytical skill and IQ level. IQ, EQ, emotional quotient, IQ, all of that. The basic thing. You don't have to be a genius or you don't have to be an extremely intelligent or anything, but you have to understand the numbers. You have to, it is better that you have the skill to juggle with the numbers.
Yeah, mostly the concept goes with good crunching of numbers and keeping our emotions away from money.
Correct.
So I think
Yeah.
I would mostly tell the same points if somebody asked me the same thing. So this wraps up our rapid fire, even though it was not exactly rapid. So I want to change the entire dynamics of the question. So I would, last couple of questions is what we have. So one thing which I have never heard you spoken of, or one thing which we might have missed, is with all these, like say from 2021, 22, 23 and all, like this automation, algos, a lot of things are coming up. So I don't know, maybe we might have missed, but I haven't seen you publicly speak about it much, right? So I have two questions under this, right? So one, why doesn't Shijumon maybe put all of his learning into a system which can start making decisions on its own, and rather focus on just building up new things than focusing on the execution first? Second one, do you think with so much systems become so efficient, right? So a lot of AI, machine learning, everything coming up. So do you think with these things coming up and they have better analytical power, so the general tendency or general profit potential for a normal retail trader is going to get lesser or become lesser because markets will start to become more efficient? So two questions.
So the first thing, why don't I put my learning into the automation and do it, right? So what I'm thinking is, my understanding is like this: whatever be your system, if you can automate that or you can put it in the system and make it work, how much ever good it is, over a very short period of time, its efficiency will be losing and you will make something slightly more than the FD rate plus inflation rate.
Okay.
That is because our AI algorithms and machine learning and computer systems are so efficient these days. Whatever inefficiencies are there which can spot by the machines and deploy, it will do all of that. How much ever smart you are, whatever you are doing, if it can be translated into an AI or something, it will be done by so many other people in a larger scale, and it will lose its bigger edge, and it will become a normal edge, and you will make maybe 20% or 30% year on year. It will be like that kind of a system. Definitely it is happening right now. We are losing lot of means the number of opportunities that we are getting, it is reducing big time. But at the same time, there is another side to it, because all these things are happening. When the occasional opportunities are coming in, those will be too huge.
Got it.
Like previously, maybe we never used to see 1 to 2000 or 1 to 100 kind of movement many times, right? It was like occasional thing.
Right.
But now, whenever the market is going out of control of these machines and algos and all, it happens quite frequently.
Got it.
So although the number of opportunities that are coming will be less, the bigger opportunities will be more.
Understood.
That you need to balance. You need to evolve according to that, and you need to
Got it.
capitalize it. May not be 100%, but at least once in a while you need to get that kind of trade.